Now, with the Trump administration coming into office and now through executive order, there's 5 new changes to credit scores and to IRS tax refunds that you really need to know about so you can make the right financial decisions for you and your family. And I'm going to break these down in this video. So if you're new to this channel is designed to help you no matter where you are in your credit journey and to teach you how to leverage your credit to make money. If you like that kind of information, make sure you subscribe to the channel. And if you go to my website, I give you this free hard inquiry removal package. You can download it for free. I'll leave that link in the description of the video in the pinned comment section. Now, the first change that's coming up is now the collections started on student loans. So by May 5th, 2025, they will be collecting on your student loans if they're in default. So that means wage garnishments and withholding your tax returns. So make sure if you have student loans right now, please check on the status. I am quite sure that you need your money. And if you don't need it, you appreciate holding on to it. And you don't want the implications of it going into default and collections on your credit report because financially it can be damaging. So this is a major change from the last previous years, especially with the pandemic going on. Many people have not even paid their student loans and haven't checked on the status because there has been so many things going on, especially during the pandemic. Many people lost loved ones, lost jobs, and this is going to be a big change and adjustment for people. So make sure that you check on your student loans. And I made a video on how you may get student loan forgiveness and have those student loans removed. So check this video out. I'll leave the link in the description below. Now, the second big change is coming to mortgage scores. Now, when it comes to mortgage scores, this is a different scoring model. They use an older scoring model of a FICO 2 or 4 or 5. So when you go for a mortgage, you may be surprised to see that you have a lower credit score than what you're seeing on your current credit reports because that model that they're using now on average is going to be a FICO 8 score. And the older model scores judge you differently to actually get your credit scores. So people are surprised by that. The reason why they use these older models, because with a lot of FHA programs and other government programs to help homeowners buy homes, they actually legislated it years ago. So those models was in play. That is what legislators actually approved as the scoring models at that time. But those scores tend to be lower than these current FICO scores. So now they are going to change the scoring model to qualify you. Now, with the older FICO scores, mortgage companies will use all 3 credit scores. So they're going to pull from Equifax, Experian, and TransUnion, and then they will take your mid score, meaning not the highest credit score, not the lowest credit score, but the one in the middle to judge you, to approve you for that loan. But now they are going to use a FICO 4.0. And that's going to be Advantage score. And they're going to also use a FICO 10T, meaning trending data. So now they're only going to look at 2. Now, you already know if you have Credit Karma, those are Vantage scores. And you will see your score higher many times on Vantage scores because they take different things into account. And so this makes it easier for people to qualify for a mortgage, and they're only going to look at those 2. But with the FICO 10T, that's going to be a little choppy because the 10T is for trending data and it looks at your debt. So credit card debt and other debts. And is those debts going down? So they look at that in a 24-month period, meaning 2 years. Now, the older models did not look at it that way. They only looked at it at month to month. So with the trending data, the only downside is a lot of people right now after the pandemic use their credit cards and they have high credit card debt. So that can be problematic. So it is meant for more people to qualify for mortgages, but we would have to see what this is going to produce. I hope people are going to be in a position to actually own home and actually have generational wealth. And if you're a person that's looking to go and buy a home now, it's very important that you focus on improving your credit score now before you apply for that mortgage, and try to get as high as a credit score as possible, because it dictates your interest rate for the longer period of time of the life of that mortgage, and it can save you a lot of money. Now, users in my elite credit systems like Sean went from a 612 credit score all the way over to a 770 credit score in a matter of 6 months, and now he's at an 803 credit score, and he's able to get business credit that he got approved for his business. So it does not take a lot of time to improve your credit scores. So if you need my help with my AR software and coaching, the link is in the description of the video and in the pinned comment section. But make sure that you prepare yourself now if you're serious about buying a home, because too many people go ahead and get their scores pulled, and now they're in a predicament because their scores is lower, and they may have selected a home they wanted to buy, but now they have to improve things on their credit scores to qualify, and they don't have enough time. So make sure you forecast that. And they're going to roll out these new scores by the fourth quarter. So that's going to be towards the end of the year. So this gives you time, and that may put you in a better position with a higher credit score. Now, the third big change is also coming to FICO scores with the mortgage industry. Now, FICO will be teaming up with Cactus, which is a fintech company, and they're saying that their partnership together for mortgage scores will ultimately end up with better mortgage rates for home buyers. And it is designed to give better options for the home buyers to get better interest rates, and can open up banks to produce more mortgage loans. Now, what this is going to be is for mortgage brokers to have a simulator. So when they input your information, this can allow different variation options to construct a loan offer. They believe this will give a lot more opportunity for people to get homes, so the bank does not have restrictive underwriting requirements and block a lot of people out for qualifying for a home loan. And hopefully this will open up more people to home ownership. Now, the fourth change coming to credit and credit scores is to credit card interest rates. Currently, right now, there is a bill being presented on both sides of Democrats and Republicans to cap interest rates on credit cards at 10%. Donald Trump has recently said that he would support this bill if it hits his desk. Now, this would be a welcome change for most, because many people right now are really struggling with credit card debt and interest rates being really high at 29%. And they just keep racking up on these charges month to month, because if you do not pay off that balance, then every month that interest is just accumulating, and many people are in a financial strain. So all they're doing is paying just the monthly amount that's due. And with interest rates being capped, this may give relief to some of these people and can help people get out of debt faster. The fifth and final change is to IRS payments of your refunds. After September 30th, 2025, you will no longer be able to get a paper check, because 1 out of every 10 paper check is taken fraudulently. So this should minimize that situation of fraud with tax returns. So hopefully this information was helpful. If you have any questions or comments, leave it in the comment section. If you have more detailed questions from me, you can go to my website and all your questions go to my cell phone. I hope to see you guys in the next video. Stay tuned.